Welcome to another edition of The Trading Script, Markets in Motion. Today is Thursday, September 19th. And what do you know? Just as we anticipated, the market made another attempt toward the upside, and with that, a new all-time high. So, just in case you're curious, you can watch our video from yesterday and find out how we figured that one out. But of course, that's in the past now. And what's important is what happens next. Where do we go from here? Well, before we draw any conclusions, let's look at some charts, starting this time with Caterpillar. If you watched our video from yesterday, we talked about why this chart was important for us to track, and why it was telling us that the SPY would make another attempt at a new all-time high. Nevertheless, the important thing is what this chart is telling us today. To start, because of this significant move to the upside, CAT is now, at least in the short term, overbought, meaning that CAT is at an extreme momentum-wise. Hence, some consolidation or a pullback is now necessary. Of course, CAT could still run a little higher tomorrow into an equal high, which, as we mentioned in yesterday's video, means the SPY may also go a bit higher before it reverses. Furthermore, let's look at the chart of the HYG, or the High Yield Corporate Bonds chart. If we check the weekly chart, we can see that this breakout looks very promising, signaling more upside in the market in the months ahead. However, we reiterate, this is the weekly chart, and this particular structure, meaning that of the moving averages, is still bearish. Why? Because the slow-moving average is still above the fast-moving averages. Thus, consolidation or a pullback lasting a few weeks can still occur in this chart, still without negating the long-term bullish outlook. And speaking of negating the bullish outlook, we need to take a look at the VIX. So the SPY has made a new high, but the VIX, well, the VIX hasn't yet broken its uptrend, which, along with the overextended market conditions, at least in the midterm, signals an incoming pullback, or at the very least, some consolidation. The problem, however, arises if the VIX only consolidates within a range instead of rallying, failing to give us an entry point for going long in the market, as this could translate into weakness heading into October, which wouldn't be unusual for that month. Of course, it'd be much better if we just had a nice pullback so we can get a good entry point for going long, at least for the first half of October. Now, if you're asking, should I have bought the market yesterday? Well, the answer depends on which stock. While we saw strength in Caterpillar, not every stock had a nice rally today. Nvidia, for example, wasn't so lucky. And it's not that the stock didn't go up, the issue lies with its inherent volatility. Having a 4% rally is nice and all, but not when your potential downside is much larger than that. This is especially true if we take into account how overextended the market ended today. You see, while there are outperformers and underperformers in the market, very seldom does a stock go up when the rest of the market, or let's say the SPY, is going down. So, stocks that show weakness while the SPY rallies tend to show even more weakness when the SPY retraces. That's why we've been saying to remain cautious and avoid going on a shopping spree, even if the SPY is breaking to a new high. Once the market retraces, however, that would be a different story. For now, we need to remain patient and wait to see if the market gives us a good entry point. And of course, be vigilant of any potential negative divergences developing across more assets, as these could suggest an actual break of the uptrend and a significant top in the SPY. Thanks for watching, and don't forget to comment and subscribe as we bring you more videos on market and technical analysis.